welcome again to the podcast by Theia Ventures, Unheated. We're a climate tech fund based in India, and we're really excited to have today Rahul from 2150. 2150 is a venture capital fund founded in 2019, a $300 million venture capital fund headquartered in London. And the fund makes investments in the urban sustainability technology sector and the built environment. The mission of the fund is to set the standard for construct capital and back a portfolio that includes potential and a little bit of background about Rahul. So, Rahul is a partner at 2150. Before joining 2150, Rahul co founded Eat First, which he ran as CEO for several years before the company was acquired in 2020. He was also a managing director in Rocket Internet's investment team, focused primarily on urban on demand mobile businesses. And he began his career at Goldman Sachs, where he spent 8 years as an executive director in equity derivatives trading. So, welcome, Rahul. Really happy to have you on board today.
Hi Priya, great to see you, and thanks for inviting me. I'm very excited to chat to you about what we're doing at 2150. Thank you for the intro that you made already. Um, I'm based in London. I'm a recovering investment banker and derivatives trader. I was at Goldman Sachs for many years, but I usually describe myself now as a grateful venture capitalist. So grateful for this incredible opportunity that we have in front of us to make a difference to the world, whilst also providing some outsized commercial returns to those that are willing to take some risks today.
Great. Yeah, I like that description a lot. um, so, just to dive into our conversation,
Yeah.
we understand that 2150 is investing capital into the urban stack or the built environment, which we also understand is one of the prime, emitters of carbon emissions, at least up to 40%. Wanted to understand a little bit more about the thesis and the focus areas of the fund, and what type of startups do you generally look to invest in?
Yeah, sure. I can give you an overview. So 2150 is a global venture fund. We invest in early stage companies. We focus on sustainability within the urban environment. So we're typically backing businesses that are changing the way cities are designed and constructed and powered. And we've invested in some transformative tech companies that we think can become not just unicorns, but also gigacorns, which was a term that was coined by my partner Christian a few years ago to define companies that are able to lower CO2 emissions by 1 billion tons per year while still being commercially successful. So we're yet to see gigacorn today, but we hope that at scale that we can find some companies that become a gigacorn. And we typically invest between 5 and 15 million euros as a first check across most kind of urban and climate tech sectors. Moving on to the thesis. So our main focus is how we make the urban environment net zero. And we know cities, they already consume over two-thirds of the world's energy, and they account for more than 70% of global CO2 emissions. And then we also think about the fact that the pace of urbanization means that we're going from 50% to almost 70% of people living in cities over the next 30 years. So we're going to have 2 billion new homes built over that period. And so that over that time, the share of CO2 emissions coming from the built environment is only going to go up. And so it's clear from our perspective, if we can't win the way to get to net zero globally, so we need huge innovation in cities for this to happen. That's the broad thesis, but we also need to remember that cities are also good for humanity as well. Urban citizens are usually, on average, healthier and better educated, and they live longer and they're more prosperous. And so when we think about the kind of technologies that are needed, it's not just kind of carbon reduction, although that's where we could have the biggest impact from a climate perspective, but it's also thinking about how to make cities more resilient and more efficient and more sustainable and also healthier for the citizens as well. So that's the kind of broad thesis of the fund, and then we bucket that thesis into various sectors across what we call the urban stack. And you mentioned that in the intro, like that kind of represents, in our perspective, like the way cities are made up of kind of interconnected layers between, the way you design them, the way you build them, operate them, and experience them. And we look for companies across all these layers that are innovating, generating impact, and then have really high potential for commercial returns.
Great. No, thank you so much for that really comprehensive description. About the urban stack, so there are very
Yeah,
subsectors, many subsectors within the city. Could you help us understand which ones, have been sort of key themes within your portfolio, for example? I've sort of seen on your portfolio carbon cure technologies
yeah, yeah.
and others, and aeroseal. So, what sort of aspects of a built environment would you say kind of covers where you actually see the market opportunity or the technology opportunity?
Yeah, so I can talk you through some of our investments to give you an idea. Carbon Cure and Aeroseal were actually a couple of our first investments that we made a few years ago, and I can also tell you about some of the more recent ones as well. Carbon Cure was an interesting one. We typically, the way we look at investing is from the perspective of doing deep dives first. Areas. One big one was cement and concrete, which we know generates today 8% of annual CO2 emissions, which is just incredible. I mean, if that industry was a country, it would be the world's third largest emitter after China and the US. So it's such a huge sector, and it's an incredibly large market. It's a $500 billion market. And it's got a growing focus on kind of sustainability. There's lots of regulatory tailwinds now. We see coming out of the US for kind of public procurement of low carbon concrete and things like that. So we started looking at that sector when we first started the fund, and that was our first kind of deep dive. We looked at all the technologies that were available to solve this big problem of the CO2 emissions embodied in buildings within cement and concrete. And then we looked at all the technologies that were out there, we mapped them out, and we found Carbon Cure, which is an incredible company. What they do is they actually make low cost hardware, and they also install sensors into cement mixing plants, and they inject CO2 during the concrete mixing process, so that captures the CO2 and that makes the concrete stronger as well. And it's now deployed across hundreds of mixing facilities worldwide. We supported the company in their expansion into Europe and Asia, and that's typically with some of our US deals. As a European fund, we've actually done kind of probably more US deals than you could probably imagine. But a lot of those companies have been companies that have been looking to expand into Europe, where we could help to support those that and facilitate that expansion. So Carbon Cure was one of those. It's a really really exciting business, and the concrete that's been created by Carbon Cure is no different really from a building perspective than any other concrete. Just has a significantly lower carbon footprint, and they also won the Carbon X prize as well. So they've done some great things over the years. We co-invested with Breakthrough Energy Ventures in the US, which is a great partner of ours and a great climate tech fund. Also Amazon and a number of others. So that's a really exciting business that's doing very well. And then you mentioned Aeroseal as well, which is this is another interesting one because it's probably like the least kind of sexy VC investment that we could have we could have made. We looked at air leakage from ducts in buildings. So it's not your typical VC is not going to be investing in something like that. But we actually found that the building envelope itself is probably the largest source of energy loss in the US. And Aeroseal was a very interesting business because it wasn't your typical kind of VC business, but it was actually founder owned and operated, many years old, but they've been kind of growing steadily, capturing a lot of market share with a really interesting proprietary solution, which kind of solves these leakage problems that are otherwise very very difficult or kind of unfeasible to solve without rebuilding the existing building. And what they found was that with this kind of patented technology, they can actually seal a building and result in 30 to 40% of energy savings, which is really really impressive. And it's a great business model that can kind of continues to grow. And it's one of those um, it's one of those interesting things in our space that actually when you find some of these deep tech companies that are building this proprietary hardware, they actually build kind of quite a lot of defensibility in the product because they've been developing this for so many years. And then you start seeing kind of also really good margins for those businesses. So eventually the kind of commercial case kind of builds itself. And we saw that with Aeroseal. They've already sealed now thousands of homes and commercial buildings globally. from single family homes to hospitals, and it's now the technology is applicable to kind of large segments of global real estate and infrastructure. So that was another exciting one. Again, we co-invested with Breakthrough Energy Ventures there as well, and another great partner of ours, EIP, Energy Impact Partners. So there are a couple of the ones we did much earlier in the fund life, and then there's a couple of companies that are interesting, that we've invested in most recently. One that we announced recently is called Atmos Zero, which you may have seen. This is another deep dive generated deal that we did. We did a deep dive into industrial heat, and we found that actually there is there's a huge market for low temperature, so 100 to 200 degrees, industrial process steam, and that accounts for 5% of global energy demand. So over 2 gigatons of CO2 per year. So another big industry that really needs to decarbonize, and also a really tough sector to decarbonize as well, because these are really heavily emitting industries, and also these are kind of industrial businesses that would typically not want to change the way they manufacture their products today, and the way they operate their businesses and their factories. But Atmos Zero has created a very interesting solution because it's a pure drop-in solution. So it's a heat pump, industrial heat pump, and kind of proprietary compressor, which is very scalable because it uses, like, the majority of the components are kind of off the shelf, but it's also very defensible as well because of the compressor technology. And it's the most kind of cost effective solution that we've found for industrial steam. If you compare it with all the other solutions out there, we looked at kind of things like electric resistant boilers that are out there. We looked at kind of the hydrogen option. We looked at waste heat, heat pumps that use kind of waste heat. We looked at so many different solutions, and we found this one as kind of just the best option because it was really cost effective. The payback period was really low, and it was a drop-in solution, so it was very easy to kind of retrofit an existing factory to go in and deploy it. So it's an exciting company. We just we co-invested actually with the Engine in the US and on that one. So we're quite excited about that too.
Great. Thank you so much for sharing. When you were mentioning about the deep dives of sector mapping and landscapes, that's exactly how we also focus on building our thesis. And then once we're
Yeah.
convinced about a particular area, then we go and speak to all these companies that are operating in the space, and then select the best one, obviously. So we have this constant exercise every 3 months of reevaluating which sector we want to dive deeper into, depending on the new technology. I mean, which ones do you think are coming up? I mean, that you haven't yet had a footprint in, and which you're very curious about diving deep into.
Yeah, so actually one interesting thing that will kind of hopefully lead us there is the fact that all the companies I mentioned to you just now are predominantly deep tech hardware companies. But actually, as a fund, we believe in differentiation within the portfolio, because a lot of those companies that are building new hardware solutions, yes, they might be able to kind of decarbonize big industries in the long term. It will take a long time for them to have impact today. And so we also believe in investing in early stage companies that have impact today because they're already deploying technologies, and a lot of those are software solutions too. And so in the fund life so far, we've invested in a number of those types of solutions. So there's an exciting business called Open Solar, which is basically just like catalyzing solar deployment. They do solar design technology for contractors. And the interesting thing about that industry is that although it's a kind of a very established industry now in terms of kind of solar panel installation, it's super fragmented, right? They're like, and very hyper localized, right? There's thousands of contractors, and that across the world, and that creates a lot of friction for them, between kind of service providers and the contractors themselves and homeowners. And there's a lot of inefficiency in that process, and kind of suboptimal processes when it comes to procurement, design, installation, management of the service itself, and the kind of client relationship. And it's such a huge market, right? It's hundreds of billions now, and seeing kind of continued growth. And so what Open Solar does is it's a software platform. They provide that free to contractors. So incredible, design technology provided completely free. And then, Open Solar kind of is like a marketplace for services that are provided for those contractors. So that might be kind of financing options. It might be hardware, the ability to kind of buy solar panels, batteries, inverters through the platform itself, and also various kind of marketing services and eventually, or other solutions too. So that's a company that's been, in our portfolio for the last year, and they're growing really quickly. Now we're starting to see $4 billion of GMV of solar transactions going through the platform. So kind of really exciting. And there's a number of other companies. And you mentioned about kind of what's our view of the future and where is this going. Last year we invested in a couple of companies in the home decarbonization space, where one in the UK called Home Tree, one in Germany called 1,5. And that's an area which we're very interested, because we're looking at kind of global residential building stock, which is responsible for 10% of CO2 emissions. It's like 5 to 6 gigatons a year, but it's also held back by the fact that homeowners generally just don't have the information to enable themselves to effectively lower their energy bills in a cost-effective way and also decarbonize their homes. Generally, they feel, and particularly we see this in the UK a lot, is that there just isn't enough information out there. So if your boiler breaks down, you're typically going to replace it with another gas boiler, because that's what your contractor coming in as an emergency solution is going to tell you to do. And there just aren't enough engineers, there aren't enough electricians that understand heat pumps in the UK. It's a growing sector, but if you look at like the fact that there's probably a couple of thousands of heat pump installers and there's like hundreds of thousands of gas boiler engineers in the UK, it's just a kind of totally different scale. And most people feel that those other solutions are going to create a lot of hassle. They don't know what happens if they break down and what to do about it. And as soon as you install a new gas boiler, you're kind of basically locking in the CO2 emissions into that asset for the next kind of 10 to 20 years before that one breaks down. And so we really want to avoid that happening. And Home Tree is based in the UK, is a great solution for that, because they're combining the service element. So like they're providing kind of a monthly contract to actually go and service the heat pump or the electric boiler, make sure that the homeowner feels secure that if anything happens, that they have someone on call that can come and solve it. And then they also have contractors that are going out and installing those, and they're providing lease options as well for homeowners that think about affordability and the kind of potential for the payback time on the energy savings. So both Home Tree and 1,5 is doing that, and where we see the future and that leading to. I actually saw in your portfolio that you had invested in a VPP player. We've just done a deep dive on kind of decentralized energy, decarbonizing the grid, and the ability to do that through dynamic energy tariffs and creating virtual power plants. And that's where we're spending a lot of time looking at the solutions that are available to help homeowners and companies, kind of commercial buildings, manage the assets within those buildings in a more dynamic way, and hopefully in a decentralized way, which then reduces the impact on the grid, right? And helps to stabilize the grid, but also creates then some form of kind of microgrid or localized grid externally, that's decentralized and enables people to reduce their energy bills, but also increase the amount of renewable energy that's being used in the building. And so we see that as a really exciting space, kind of grid enhancing technologies, virtual power plant solutions. So we're spending a lot of time on that. We're also spending quite a bit of time thinking about mobility as well. So we know, like within the climate tech space, over the last few years, we've seen initially a big rise in micro-mobility solutions, which ultimately struggled because of the unit economics of those assets, because a lot of them were underutilized in cities. And then we saw a big wave of kind of last mile delivery options, which also struggled because of the unit economics of like the high delivery costs and the utilization needed and the density needed to make that work. And so we're thinking about this this big industry that needs to decarbonize, the fact that people demand more and more quicker. So, delivery is not going anywhere, like last mile delivery as an industry. And we're looking at the kind of pockets of potential there, particularly in emerging markets. Actually, we just did one investment, which we announced recently in Latin America, which is called Vamo. And you guys have also done some investments in kind of battery swapping technology. So in India, and we did have a look at. A lot of the solutions in India are actually quite well developed, like Battery Smart and a number of other companies that are out there doing great things. Well, this is a company called Vamo, which we invested in Brazil, which is basically decarbonizing two wheelers. And I can very happy to tell you more about that. But that's an industry where we're thinking about kind of how can we effectively help decarbonize these industries. Another one is like the intercity bus market, which again is like dominated by you know like typically non-electric vehicles that are really really hard to actually become electric, because then you need like the charging infrastructure, and that's very difficult to deploy for kind of long distance travel. So we're looking at kind of ways to decarbonize that industry as well.
Fantastic. No, that sounds like a really varied, list of sectors
Yeah,
that you're planning to go into. But happy to share more notes offline about our VPP company in our portfolio, which is called EdgeGrid, and then a few others,
yeah,
also in the mobility space, in fast charging and others. And I think it's really nice and interesting to see how mobility and the built environment can be integrated potentially, through EV charging infrastructure actually providing an energy source for a building, which can then
yeah,
plow into solar rooftops, etc. So that's the microgrid, or the sort of standalone models that you mentioned, and then eventually the trading of energy credits as the VPP goes. So we've done a lot of work on that, and I think it also depends on the openness of the utility to kind of partner with you on that, because it's
yeah,
fine to have a technology that is behind the meter, but eventually you need the utility to be able to want to buy your data stack once you've been able to collect energy savings data over hundreds of different buildings. But yeah, I think that's actually an interesting point I wanted to sort of go a little bit deeper into, is your focus on the emerging markets. So you mentioned Latin America and that you've looked at India as well. How do you see, because obviously in Europe and the US, the technologies are perhaps more sophisticated. The venture market has been around for a while. Founders, typically have started multiple companies before then they come to you, or maybe you've seen repeat founders, or just curious about how you see the sort of opportunity in Southeast Asia, Africa, India, and some of these other markets, and where do you think your next investment will come in, and how
yeah.
would you assess that? Yeah.
Yeah, great question. Well, I mean, look, the kind of problems that we're trying to help solve are big global problems, right? They're not restricted to Europe or the US. So it's important for us that we don't restrict ourselves also to Europe and the US, which is why we've kind of found areas where we can also partner with local VCs that know the local markets much better than us, where we can kind of bring our kind of network and experience, and also operating companies, but also helping those companies at some stage translate their technologies into Europe and the learnings that can bring, and helping them kind of expand at some stage when the time is right. But like I said, we've made investments in South America with Vamo, and the interesting thing that we saw there is that we looked at similar companies that were doing kind of electrification of two wheelers in European markets, right? Like in London, for example, and Paris. And if you compare that with a market like, Sao Paulo, which is where Vamo operates, the scale of market is just so different that actually you can actually see whether these technologies are going to scale and do well much earlier in emerging markets, just because of the market size, and therefore whether actually that business model, the unit economics, can work, and then can translate very easily and can be deployed in some of the smaller markets in Europe, for example. For example, with Vamo, in Brazil, there were almost 5 million motorcycles sold last year, right? And less than 0.5% were electric. So it's just such a huge opportunity there. to do that. So Vamo is doing kind of electric two-wheeler leasing and creating a battery swapping network. So that's really exciting. And we've also made investments in Asia. We've done one so far, but we're looking at many others as well. The one we've done is Amped Energy, which is decarbonizing construction sites with emission-free generators for heavy lifting machinery. And the interesting thing there is that typically cranes, they require so much energy density that when they're operational, that the average kind of diesel generator used in construction, it emits more CO2. Actually, I think it's like 70% more CO2 per kilowatt hour than a coal-fired power plant. So these heavy machinery that are used on construction sites, they're creating lots of pollution and lots of CO2 usage by requiring these diesel generators. And what AMP have done is they've created these electric generators, so like clean, quiet, battery power generators, to make electric power the primary energy source for construction sites. And they result in kind of 80% less CO2 compared to the diesel generators. And they do like a rental, like leasing model. And they've deployed many generators across Hong Kong construction sites. They're now shipping in Singapore, in Australia, in the UK as well. So we definitely have a kind of global view, and to kind of go, I think to go into that in a bit more detail, the way we look at it, the world is urbanizing rapidly, right? Like we know that the number of city dwellers is going to rise to nearly 7 billion by 2050, and people in cities are already experiencing and kind of increasingly exposed to the impact of climate change, right? Like from extreme heat or air pollution, changing patterns of infectious diseases and food insecurity and all of those things, and some of the fastest growing cities are becoming unlivable due to rising temperatures already, right? And that's quite surprising that it's happening already. But like for example, we've seen San Antonio in Texas that added more to its population than any other city in the year last year. But that's already had over a dozen days of 100 degrees Fahrenheit last summer. And Phoenix, Arizona in the US as well, which was second in terms of population growth, that had a record number of heat related deaths last year. And then if we translate that to EM, we've seen, for example, in Pakistan, like record breaking temperatures last year, the catastrophic floods claimed thousands of lives. So this really is a kind of a global problem, and so we want to think globally as a fund too. Although we do need to be humble to the fact that we're also pretty young, right? As a fund, we raised our first fund in end of 2020, beginning of 2021. We have kind of aspirations to be a global fund, but we also we need to kind of build our own experience and our own kind of networks globally to be able to partner with the best VCs in some of those local markets.
Great. I think that makes a lot of sense in that strategy. And also curious to understand. You mentioned that you're growing the fund. So obviously, the first fund is already raised, and you're probably looking at the second fund. And currently, you mentioned 5 to 10 million euro. Sorry, 5 to 15 million euros is your first ticket
Yeah,
into a company. So Series A plus, I would imagine, is the stage that you come in.
yeah.
And you partner with all these incredible VCs like Breakthrough Energy Ventures and the Engine and others. And then what do you typically see as the sort of I would say the trajectory of these companies after you've invested? So and as you're thinking about the gestation period of how long you're going to be in these companies, where do you see the exit coming in? Is it to larger corporations in the built environment space, or is it an IPO, or which? I mean, is it climate funds that generally come in after you, and larger infrastructure funds, and maybe would be able to give you an exit?
Yeah, I think we should talk about the market overall, right? Because, and I'd love to hear your views on this as well. If we look at what's happened over the last few years, I'd say 2023 was a fairly tough year overall for climate tech and all venture capital funding in general, particularly in terms of exits to the public markets, which was like down 65%, globally. But we still had over $50 billion invested in climate tech. That was down 30% from 2022, right? But it's still, a big number. We saw last year in the higher interest rate impact, right, continuing to impact market sentiment, rising supply chain costs as a result of that, and a slowdown in exits. And the biggest drop last year was like later stage deals, right? We saw like Series C and growth investment falling 40%, whereas the early stage, Series A, for example, was only down 10% year on year. But then thinking about, you were asking about the kind of next stage of growth for our companies. There are lots of signs that things are picking up already this year, and the markets are rebounding. Interest rates are kind of expected to come down. We've got continued policy incentives and regulation as a tailwind, for climate tech. We've seen lots of big commitments, right? HSBC and Google announced a 1 billion partnership into climate tech a few weeks ago. Lots of new fund announcements this year, from kind of new and follow-on climate tech funds. So Voyagers, Arcturn, Virus, and like lots of them, which is fantastic. And I think if you look at the sectors that are growing the most within climate tech, they're typically the urban tech sectors, actually, the ones that we're most focused on, right? So like industrial decarbonization in mining, in steel, in cement, industrial heat, battery manufacturing, recycling. The challenge, they're the sectors that are growing the most. And so we think that urban tech and the ability to kind of decarbonize the urban environment, that presents the best possible opportunity in the market today. So we're seeing, I think, good kind of investing market this year. We are still deploying capital. We think, valuations are, more attractive compared to previous years. And we're starting to see, activity and valuations kind of increasing again at the earlier stage compared to the rest of the market. So lots of reasons, I think, to be kind of, you know, cautious but optimistic. Um, and then I think if we think about like our strategy, for future funds and how we deploy capital, I think we were going to have the same strategy as we've had in Fund One, right? In terms of kind of target market, ticket size, and that's where we've seen the most learning in terms of kind of our abilities and skill sets and our network and sourcing capabilities. And then in terms of exits, we're starting to see one, public markets picking up. So that will provide over the next few years, and we're still very early, even into Fund One's lifetime. So those exits, if they're coming into the public markets, they still have many years to go. But also we're starting to see more M&A activity as well, particularly when we look at some of these home decarbonization businesses. We're starting to see actually quite a lot of roll up plays in that space. Private equity funds that are building big energy service providers. So we do think that there are opportunities there for kind of decent exits in the future for some of these companies. I don't know
Great.
how do you see the market at the moment?
Yeah, no, I was actually just going to mention as well. Thanks for sharing your opinion on that. I would agree with you. Definitely 2024 is looking a lot more optimistic. I think it was looking bleak last year with the funding winter, as it was called, and many companies sort of had raised in phenomenal highs in 2021, and then were cash strapped and like, had burned through quite a lot of their corpus, at that time, and then had really need to now focus on profits and sustainability, etc. In climate tech, though, in India, interestingly, it has been sort of fairly insulated from, I would say, a larger funding winter compared to other sectors. There's been literally or virtually no bubble. I think companies have continued innovating. It's a very nascent space in India, as we call it, climate. I think previously it was labeled clean energy, and it was only, solar, mainly wind, solar, and these other allied sectors in energy generation. And now, obviously, EV, batteries, sort of agriculture, food tech, circular economy, carbon, all of that has taken place, been included as a multidisciplinary space. So we see in India actually a lot of early stage capital. So folks who are able to write checks, or funds rather, who are able to write checks of anywhere between 2 million to about 15 million. But then when the growth stage capital comes in, that's when we see a lot of companies needing to look abroad for growth capital, which is where it would be great to partner with funds like yours or similar funds who are looking to invest in the Indian market, because I think in India we still haven't got there. I think there's a minimal list of growth funds here. There's also the larger private equity funds and infrastructure funds, but they're not really looking at climate at the moment. It's kind of going to be a longer cycle for them to take this as a sector of interest.
Yeah.
Um, yeah, which is why, I just a couple of more questions before we close our discussion. Just on financial returns and, the sort of trade-off, or maybe you don't have a trade-off between the financial returns and the gigacoin, kind of motivation that you have. How do you sort of evaluate, is it the typical kind of commercial scale returns of a minimum IRR that you're looking for, and what you sort of promise to your LPs? And then how do you measure sort of the gigatons of carbon removed? And is that a consideration as well? Does that go into a blended return of some kind?
Yeah, that sounds good. Good question. So maybe taking a step back and thinking about how we think about timeline, and also how we're thinking about the types of companies that we want to invest in for the biggest impact. We're thinking about the kind of, like, globally, the curve of emissions, right, from now to 2050. How do we get to net zero? And the fact that we are still emitting more CO2 on a yearly basis. And so if we want to have actually an impact of getting to net zero, we need to kind of bend that curve very quickly. And up until now, our emissions per year have still been increasing. So if we want to get to net zero by 2050, we need to have really steep reduction in that curve just in the next, I think it's like 8 or 9 years, I read most recently. And that's like less than the length of a typical VC fund cycle. So from an impact perspective, we need to start deploying technologies at scale that are having an impact today. So we're thinking about that a lot when we think about our fund life, knowing that a lot of the early stage deep tech companies will need a lot longer than your typical 10-year fund cycle to kind of get to scale and potentially get to an exit. And we're thinking about when is the right time for us to deploy capital in those companies. So typically, the stage which we invest for the kind of more deep tech hardware companies is usually where they have a product, and the kind of more like science risk, if you like, is reduced, but there is still technical risk in getting that product to market, or engineering and kind of scale risk in deploying it. And then commercial and operating risk there as they start to deploy that capital, deploy those products. And that's also an area where I think we can help them the most with our kind of industry network and ability for help supporting those companies and helping them scale and introducing them to the right types of customers. So that's what we do on the kind of deep tech side. And then on the software side, we're investing in companies that are already, generally between, let's say, 1 to 5 million ARR or recurring revenue today. So that, again, as we start investing, they're already starting to have meaningful impact, and we're starting to kind of help create that trajectory of faster growth and faster impact potential. And those companies we expect will have a shorter time to a potential exit as well. So by having a more balanced, more diversified portfolio, I think we can kind of manage that risk of the fact that typically early stage climate tech companies might take a lot longer than typical VC investment to get to an exit. And so that's how we manage that risk with for our LPs. We're typically investing, as you said before, like typically investing overall on average at the Series A stage. So we are looking for companies that can be outliers, that can become unicorns and also gigacorns from a CO2 perspective. We don't tie impact to our financial returns. It's so, and we have this conversation with LPs all the time. We talk about, a lot of LPs ask us whether, we should be incentivized on the impact that we're generating. But because the methodology around impact is still very early, in terms of in a lot of sectors, there aren't very established benchmarks and established market standards for the methodology around measuring impact. that means it's also in some sense slightly subjective, right? And we try to hold ourselves to account. We're an Article 9 fund. We want to do things properly because we're investing for a reason. We want to make a difference, and so we're very conscious about how we calculate impact. We don't want to overemphasize the impact that companies are having, but we're really conscious about how we do that, and it's so ingrained into our investment process that we say to LPs, well, there's actually, we don't need to necessarily tie our financial returns of the fund and the incentives of the fund to impact, because it's so early in it's so ingrained so early into our investment process that we would never invest in anything that we didn't think had really meaningful impact at scale. And we have a fantastic sustainability team headed by Peter Hirsch, who's really great, and he's been kind of really instrumental in kind of creating what we call a green screen. So for any companies that are at the kind of top of funnel that we have calls with and we're excited about, we then take it through this green screen where our sustainability team is helping our investment team look at those companies and talk about whether actually it meets our impact framework, and we think it could have really big impact at scale. And then it progresses through the kind of deal pipeline. So it's really early on that we start having those conversations.
Oh, fantastic. Really love your methodology or the way you think about it. And it's great that you've created your own internal way of approaching impact, rather than relying on external benchmarks. Because as you said, the sector is also very new, and the way to measure impact is new. So, and then really interesting to hear about how you balanced your portfolio as well across deep tech and software to measure out the returns, to the risk rather. But great. So I think this has been a fantastic conversation. Thank you so much, Rahul, for your time and your insights.
Thank you
Really,
for
really
inviting me.
valuable, of course. And look forward to meeting you in person, hopefully in the UK or on your next visit to India. And yeah, we look forward to collaborating with you and the fund as well on a larger
Great.
scale.
Looking forward to it.